All right, welcome guys on. Welcome everybody. I think that the signal is a little bit bad today, so it might just give everyone a chance to get in as you're getting in and everything like that. So what I wanted to do was do the post ADP analysis here, and let's take a look at the news really quickly. Now, I'm not really a person that's really concerned about the figures because, as I told you, technical analysis always is a lot more present than fundamental analysis. Most of the time when fundamental news comes out, technical news has already come out beforehand. So it's not a surprise to me if the price does, a move, and then it takes a little while to catch up on the markets. Now, I can see that Japanese yen pairs are dropping right now, which is annoying because I was holding on to myself for this long, and now all of a sudden the price is starting to climb down. But nonetheless, it's okay. We'll figure it out how to get entry on this in a minute. All right. So anyway, the ADP news, let's have a look at what the actual news reading was. Let's take a look and see. So let me pull this up here. So the ADP news was 324K. All right. So 324K for the news, which is better than expected, but not better than the previous, but it's still bullish, but not extremely bullish. So moderately bullish, right? Now, NFPs on Friday, because the ADP represents about 60%, okay, we may get the same situation where it might be better than expected. Now, the margin here between the previous and the actual expected is pretty tight because there's only a 9K difference, which to be fair, it's pretty funny that it's so tight, but this one was so wide. The end of ADP is, if I go back here quickly, is 189, and the previous was 497. So the consensus was really low. But then coming into the NFPs, it's 200 for the expected, but then 209 for the previous. So there's only a 9K gap here. So really, if the NFP results are anything short of 200, all right, so like a 150 or 129 or whatever it is, then it's going to be very bearish for the dollar. Okay, and when I see tight margins like this, I kind of know what's up already. Probably, well, it depends. Now, if this is better than expected, then the dollar is going to go through the roof, of course, because it doesn't take a lot of effort for, in this case, for the non-farm payrolls to be better than expected and better than the previous. There's only 9K difference. Whereas with the ADP ones, in order for the actual to be better than the consensus and the previous, you're going to need at least 500K change, which is a very, very large number. And in this economy, I don't know how that would really happen. So looking at this, right? And this is why I don't use the ADP personally. For me, I prefer to use the price action. If it is better than expected here, then okay, well, we're going to have a bullish result pretty rapidly because, again, the gap is small, the skew is small, right? Now, tomorrow's where things are really going to start to heat up because we have all sorts of news spread across the day. Now, in UK time, we have Australian dollar news as soon as we get to 2:30 in the morning UK time, which is the trade balance, which is the difference between the surplus and the deficit. Now, interestingly, as I said, Australia, for me, I think in the long term, is going to be a great country and their currency will definitely become a lot stronger than it is. I think it's one of the only tier 1 countries I know of that operates in a surplus and not a deficit. Okay, most countries in the first world, they operate in a deficit, which means that they export or they import more than they export. Okay, but with New Zealand and I believe Australia and I believe New Zealand as well, they both are in a trade surplus. At the moment, their trade surplus is 11, well, let's just put it this way. It's 11,791 million, something like that. Have I got it right? Yeah. 11.791 billion. That's the number. Okay. And is expected to go down by that 791 billion to just 11 million. So they basically, in essence, what this will show is that they're importing a little bit more, or their exports have decreased, one of the two. Now, you can map this over with GDP news if you're a fundamental analyst and kind of figure out if their GDP has increased, but then this number is going down, then they are exporting more, but maybe the exports are becoming cheaper because of currency changes, or they've just had to import more goods because of whatever issues are happening internally. But anyway, this piece of news is a pretty important piece of news, and I like to look at it personally for me. And I don't know, for me, the Australian economy, I think, is an economy that maybe not now, but in the future, I know right now in the market compared to other tier one currencies, NZD pairs and AD pairs that are where the base currency is the Australian or New Zealand dollar pair are not really doing so well across other currencies. They're weaker, but that's just temporary. I think that they will have their major short where they kind of, have a big crash, but then when they start to rise, I think they're going to rise to very, very good degrees. And I'll definitely be looking to pick up some of their currency when that time comes. I think Australia will do well in the long term, definitely, because they've managed to keep a trade surplus for a long time. And since I've been trading for a while, I've always known them to be in a trade surplus most of the time, or if not all the time. Okay. Now then we have Swiss franc news, which is at 7:30, which will definitely affect the Swiss franc, which is another major currency pair. We have Euro news too. All right, then we have the Wall of Fire, as I call it, at 12 o'clock UK time, which is now for me, I do think that there might be a double interest rate hike, possibly, but we'll see. It's expected to be just a 25 basis point hike, but they might surprise us with a double. Just, it depends. Now, the GDP and the CPI, in fact, for the UK has dropped below 10% again, which means that the interest rate hikes are starting to work, but I don't know how rapidly they are working. Information will let us know. There is a speech at 12:30 from Governor Bailey. So even after this news comes out, the ride on the pound is not done just yet, because we're going to have this speech come out too. All right. We have the ISM news. So we have US news also in the same day. So Thursday is going to be a really crazy day, because almost every major currency pair, apart from the Japanese yen, will have some sort of news. Now, even with the Chinese news, even though it's not really a concern of mine, I think Chinese news does affect gold a lot, because that's what they stockpile a lot. So sometimes maybe, gold might get a little spike from Chinese news. I've observed that. But again, we have almost every world major currency having some sort of piece of news on Thursday. So it's going to be very volatile. Friday, of course, you know what we're going to have, NFPs, and then we have the unemployment change and stuff on the Canadian dollar. So all this high impact news between today or Thursday and Friday is going to be really interesting. So Wednesday is really a good day, especially post ADP news, for us to have a look at what we've got going on and, take some important steps to figuring out what the price is trying to do. Okay, so this is really what I like when it comes to making adjustments to the price and getting up ideas of what I'm going to do. This is usually the road that I go down when I look at stuff. Now, we looked at the news now, so let's come back to the charts here. Let me do this. Now, if I go over and we take a look at what we've got over here. Now, I'm actually going to start off with the non-US pairs quickly first, and then we can go over to the US dollar pairs. So at the moment, depending on relative strength. Now, if you can remember yesterday, I told you that the entry I'm looking for Euro JPY is over here. Now, the body of the candle did close above this high, but what we had as soon as the new day started was now it's a bit difficult to see. I have to zoom in twice. But if I just do this here and I draw a line, you can see that we have a slight induction here, very small wick above the previous weekly high, but that was enough to send the price into a break of market structure, which we've got right here. So now that we have the break of market structure, the price is kind of pulling back, so we can find the area to get in from. Now with Euro JPY, I believe all JPY pairs are going to do the same kind of sell-off move. The absolute least area of entry that we can go for would be to the left here. We have now, because it's the new day candle, I don't really like to use them much, but it still counts. I'll use the 30-minute version here instead. We have a supply zone nested over here that the price has gone into right now. Now, hopefully it breaks above here, but if I do put the Fibonacci, it is a discount price. I believe that looks like a 62. Okay, yeah, so it is a 62. Optimal trade entry is not too far above, and then we have 86, and then the principal order block at the top here. So I'm watching to see how the price is going to play out. We have, quite a few different options to go down the road of, but I'm going to stick to my original pair, which was pound Japanese yen. Now, this is what I was saying about the Australian and New Zealand dollar pairs, that in comparison to their counterparts, from the moment that the price reached here, most of them have done, NZD-USD and AUD-JPY have both done 200 pips. So they've already recovered on the downside, the kind of this leg of the swing that we've had to this week. All right. Now, I really kind of regret not looking at AUD-JPY earlier, because this would have been a great catch. Because if I just draw the supply order block over here, you can see exactly what the price did. We had a really nice induction here. All right, this whole move, we can consider it a break of market structure. I'll use this swing low here, but we can arguably use this one. And then after we have a supply zone here, this is the area of the RTO, return to origin. We go down to the H1 and you can see it's just pretty much a simple entry and a sell from here. But I wasn't looking at AUD-JPY. My focus was on pound Japanese yen, because I just like the way it looked. But I wish, honestly, I got into this. This is such a nice sell. Stop loss above this wick here, so about 21 pips. And so far, 198. So not bad at all. Not bad at all. Really, really nice. Now, again, my target says that I expect the price to come beneath this low here and go beneath 91. In the case of AUD-JPY, I'm looking for the price to at least come back to this 91 order block here and maybe decide to fill the whole liquidity void before going long again. NZD-USD, pretty similar stuff. It's just that the price kind of dropped from a different standpoint, but similar idea. H4 supply zone. We had a liquidity gap that basically ended here, right? On the H1, this is the type 1 D1 stop hunt. Okay. Now over here, the market wicks here, so you can't actually see the market structure break, but there is a swing low over here. It's just that it was closed with a wick first and then with the body. All right. So now, if I draw a supply zone over here and just drag this right over here, you can see the price kind of pulled back, ran in here, sold off. Now, you can actually tell the difference in weakness, or which currency pair is weaker than the other by the way they've dropped. Because if you look at NZD, AUD-JPY here, from top to bottom when it started to sell off, compared to NZD-JPY, NZD-JPY has dropped by 16, let's just call it 160 pips, whereas AUD-USD from top to bottom has dropped by 223. So the Australian dollar is actually losing more strength compared to the Japanese yen than NZD-JPY is. So it's the weaker currency out of the two at the moment, just by doing this pair correlation. So we can actually use that information if we're trying to look for, if we're looking for a sell, we want to figure out which one is going to have a higher affinity and give us more pips, then you can run that example there. Okay. Now, moving over to the last pair that I'll go through, and then after we can go to the dollar index here. Let me just take pound Japanese yen and see what we've got. Now, pound Japanese yen, the play is very simple here. The reason why I took this trade, or I was in this trade and then I got stopped out at close to break even at first, and then after I had to close it after. The price, when it was selling off here, we had an unfulfilled efficiency. The price entered into the supply zone and, well, didn't enter into the supply zone, but produced a move of 600 and something odd pips, right? Then, if you notice, price came all the way back in here and has accumulated inside of this range, because this is the actual supply zone price should have went to for a short. Now, knowing how the price can be annoying sometimes, the high of this moment here, if you notice that this candle right here, if I map it across, just kind of kissed above the high, and then not too long after we've had the touchdown that's caused the price to sell off. Now, there's still quite a bit of opportunity to take a sell on here. And at the moment, I'm just watching these two kind of supply areas here. We have one that the price is holding in now, and then we have a manipulation bar or bull trap here, to be specific, that the price is wicked into. So there's a kind of a range here that my eyes are looking at. Now, hopefully, which is what I really am hoping for, is that the price pulls back up to this area and allows us to get into the supply zone right here. If that does happen, gets us into the supply zone here, then what we want to do is push down for a short, and then after our target will be down here. That's what the hope is. Now, at the moment, the price is moving, but it looks as though there is a liquidity gap here. So on the M30, now the wick of the candles got to the gap, but not the body. So we might get lucky and have another move back up here one more time, which would be great. But we'll see what happens anyway from that standpoint. All right. Now, we've got through that. Let's see what happens with those. You can play around with those and see what you grab. And let me come back to the dollar index. So in our dollar index analysis, this is the range we're looking at. If you've never listened to me before, this is the range we're looking at. And the order block that we're actually looking at is this supply order block. I know that many people think that the dollar is going to sell off, which they're not wrong about. It's just the timing of it. Because of inflation, I do think that the dollar has their last kind of, or the US dollar, Federal Reserve, they have their last weapon up of their sleeve before the dollar really suffers heavy blows. And the reason is, technically speaking, and let's use the fundamentals first, actually. Quantitative tapering means that we need to reduce the supply of a currency in every form in the market to increase the demand of it, which is a rescue move or an emergency move when inflation becomes too high, because monetary supply is too high and is causing inflation and a weakening of the currency. Now, to do that, reducing the supply of dollars will increase the demand, which will push the dollar index up. Now, from a technical standpoint, when the price reversed here, like I always say, it didn't actually return to this supply order block here. Neither did we have any induction between the highs to trigger that off. So to me, using this supply zone, which is our key area, and watching how price closed out for July, still staying in this order block, sooner or later, the price is going to make its way up onto this long area right here. Okay. Now, if I go over to the weekly here, I guess as you heard me say, my only problem is that the price didn't return to this weekly order block at least before taking off. So there is room where the dollar news might push the price down here and give us a weekly low run one more time. Now, this low here has become the monthly low of July anyway. And if the price was to come back down here one more time, that would be great, but it doesn't actually need to do that. Now, coming to our equilibrium order block. So on the H4, you can see that this range is mapped out perfectly because we have, at equilibrium, we have a H4 order block on the perfectly set in this place. Now, my thing is, which is what I was just saying yesterday, is that until 5 o'clock, we actually don't know what the price is going to do. Now, if the body of the candle does close above this equilibrium order block, then I would expect it to do the original conversation we had, which is fill out this liquidity void here, and maybe even take these highs before selling maybe again, okay? If it doesn't and the price just wicks to this high and the body of the candle stays in here, then we should be looking for a short really. Okay, at the moment on the H1 though, we've had a clear break above the H1 high. I would have liked to see the midpoint break, but it's not a midpoint close, as in the midpoint of the candle. So if there is a market structure break sufficient down here, so let's say, for example, the only swing low that is, though there's only two, but I'll use the lowest down one. Let's say the body of the candle closes something like this, or even more extreme like this. Then on the return over here, we could still go for a sell like this in that scenario. Now, we've looked at the H1 before, and we can recap on it again. That there is liquidity gaps and different things over here that give signs that there should be a short sometime soon, but we'll see when that's actually going to happen anyway. Okay. Now, coming over to actual currency pairs. Now, out of the pairs that I'm looking at, my favorite actual currency pair is AUD/USD. And my actual favorite pair right now is gold, because gold has a really nice setup that we can take advantage of. And my entry is for this range right here for a long, within this range. Now, I had a really good long going last week I gave to the students. The price came down with the US GDP news and pushed the price down and came for the weekly low. No harm done at all. The price reversed this quote, no problem. Now, the price is taking a weekly low and it opened with a gap up here. My expectation is the price to get in here and actually give us a long is what I'm waiting for, to be fair. And that would be kind of like my last attempt, only because, and if I go to my other, or if I just mark this out again, actually, you don't even have to switch screen really. If I go over to how price looks on the monthly time frame, this supply zone is a flip zone at the moment. And really, this is the last holding area for me to look for a long. My expectation is that price should actually pull back here one more time and actually fill out the last unfulfilled efficiency of supply, which is at this range right here. So this is my last target for the long before the major short. There's an obvious short that needs to happen because gold has a gap it needs to fill. But it's just all about timing. Now, if gold is going to go down here for a short, it means the dollar index would have to become extremely strong. And for that to happen would be down to inflation, some sort of inflation or major world event, which could be, of course, quantitative tapering as an effect. But as for now, I'm looking for the price to actually get into this area and just kind of shoot long. And then from shooting long, we should be looking for a crazy short to come after that. All right. Now, if today or any of the days of this week or whenever, if there's any body close, especially this week beneath this low, and the body of the candle closes here, then I actually will be coming out of any bias of a sell and a buy, and I'll be looking for a sell. At the moment, the body of the candle has strategically not closed beneath this area, but I am looking to see what the price is going to do here. So that's one of my trades I'm looking at. Now, comparing the pairs, if you want to know what I'm looking at, I am looking at Euro USD. The price is approaching the weekly low, but it's not really exciting to me. Now, if you do remember the trade that I did give you guys, if I draw the H4 area here, maybe it might ring a bell. Right? We have a weekly stop hunt here. The price broke market structure over here. The only thing is that because it didn't return, you didn't really get a return here like you would have wanted. Sometimes I wonder if price may actually do something like this and come back again and then go for a long. That would be an opportunity of a lifetime to have a second run at this. But if it doesn't, it's not really a problem. But we are approaching the previous week's low, and there is a demand order block to the left. And price may just decide to wick down here and continue to. But because that hasn't happened yet, I'm actually not making any moves on Euro USD. But it does look good though. Now, over here, the high of this week is actually this high right here. Visually, you can see. But they're not too far apart. They're relatively equal. You know, we have one high made in probably the Asian time, and then we have another definite US session swing high, which has taken this high and kind of sold off. Left the liquidity void with no feeling of it yet. So I'm sure there will be a moment that the price will try to fill that. The way that it can do that is just to take this weekly low, market structure break, and then we can go the other way, or it may push down here, maybe even go for these lows here and then after push up for a long. But definitely there is opportunity looming around the corner. And the good thing is that we have sufficient amount of fundamental news to kind of give the price an excuse to do what it was always going to do. Maybe a bit quicker than it would without, with news. Now, ADUSD, I told you, is my favorite. I'll tell you why. So what I'm looking at here, post ADP, is that we have these two highs here. Now, this high, this monthly high, has equal highs itself. And then this high right here is very close or relatively equal to this high right here. So I know that there's a lot of liquidity here. Another thing I was saying to you guys is that this formation here, for retail traders that trade this pattern, this over here is a double top, and here is the neckline. Now, with a neckline move, once the price breaks the neckline, there should be a strong amount of selling going on, which is seemingly happening right now. The price is strongly short, and it doesn't look like it's pulling back anytime soon. For me, though, which I just don't buy it. Like, I don't mean as in buying, like going long. I don't buy it because the market, if it was to leave these kind of double top formations here, at some point is going to go for it. Okay, and I think what AUD/USD looks like is more likely doing is approaching an area, either this low, which is a bit hard to see, but this is the low of June, or is going to return into the order block nearby. But this area is a vast area of demand that price could use to go for a long. For me, I believe AUD/USD has one more ride up long before a major short, which we've talked about, especially with NZD/USD, which needs to fill out some major 12-year unfulfilled efficiency, and I'll probably go through that another time. But I'm looking for price to get in here simply because we have unfulfilled efficiency all the way back up here, which needs to be filled out. The price wicked here but didn't return here. So I'm expecting that to happen at some point, which means we'll have a weaker dollar for a little while, then we have a stronger dollar, following afterwards. So I'm interested to see what happens. Now on the H4, nested right inside of this D1 area, there's a H4 demand zone sitting right here already on the zone at the end of a liquidity void. So I'll be interested, I won't take a buy straight away, but if I see gold get into my entry, then I would probably go for a trade as well on that. So this is why I like ADUSD. There's a lot of liquidity resting. If you can see over here, you can see these equal highs. There is room for a really, really nice long. But how the price will form that long, it depends on, what goes on. Probably it might, I mean, to be fair, the price has taken the low of July. And the low of June is right over here. So let's see how the price behaves. But I am expecting something like this pretty soon. USD-JPY is already done a movement that I was looking for, so no need to look at that. Pound USD, which is one of the things that I wanted to go through with you guys today, is dropping at a very fast rate, seemingly out of nowhere, right? But again, if you can remember from the news bulletin that we have this week, we have a lot of pound news coming out very soon. And so what I like to do is that whenever there's a major amount of news coming out, the day before or 2 days before, I kind of like to map myself to be in the right market direction to see what we can get. Now, if I zoom in here, at the moment, we had this major weekly supply zone, the price is broken above. If I draw another supply zone over here, you can see this is, if I isolate the range, this is where we are right now. We've had this induction here, which has caused a nice long as of recent. I'll just drag this line across here, just do it like that. And these two candles, including the candle with the wick here, represent demand. So at the moment, the price is in demand, but it looks as though it might break. We don't know yet because it's a weekly candle, not a daily one. So we have to literally wait until Friday market close to know what exactly the price is going to do. Now, if we go over to the D1, we can do some other type of mapping here of the price. First thing here is that July's low is over here. That's the first thing, because highs and lows will always be targets for the price, simply because there'll be buy stop and sell stop orders for counterparty risk all the time. So a lot of times when the market is moving the way it is, I always mark out highs and lows for that reason. Now, the speed at which price is approaching here, seemingly nowhere, means that probably the pound news or the Bank of England is probably setting themselves up for a nice profit, maybe with a long move happening. So price is already shifting beforehand to get to where it needs to. On the H4, we're already clearly past the low of last week by a good measure. So seeing something like this kind of move lets me know that probably we're going towards deeper targets, which would be like a daily range, which will be the monthly low. Okay. So once the price gets back in here, I would like to see what it does. If it gets inside of here, guys, and I'm going to put a shape here to show you what I'm talking about. If the price gets back into this demand zone, although I'm not comfortable with the fact that this demand zone itself hasn't had a return on it just yet, but even then, if the price returns into this demand zone, takes the low of the previous month, with the news, then that would be a good idea that we can say, I'm going to go for a long. All right. Now, if the fact is that if this is coupled with the dollar index becoming weaker, then at least putting those two things together, pound USD should give us a long. Because already, if we look at the highs here, these highs are equal, which is a sign of, accumulation of liquidity above these highs. Another thing is that when the price actually created this reversal, it's not reversing from interaction between weekly highs or an induction. There's nothing like that. The price actually just got into, and I'll show you what I'm talking about. The price just actually got into weekly supply here, which is represented by these two candles, and then just sold off. So just a kind of a natural reversal. So my view is that most likely price is pulling itself back up to an area of an RTO of a weekly or a return of a weekly move, and that would be the precursor to go for a long. And I expect all of these highs to be ran. Now, this is already 451 pips from top to bottom, which means that we're looking at some crazy movements possibly happening from pound USD. Now, imagine if the pound gains strength and it starts to go long, and then the US dollar loses strength, that will push the price really, really high up. Now, my thing is that I think that the price is probably going to fill this gap and probably come for these triple equal highs. We have quite a few equal highs that pound USD has left behind, especially these ones at the high of around February. We have triple equal highs here. Now, the high of the first is 1.36431. This is 1.362323. So they're basically less than a pip apart. And then we have this high, which is 1.36379. So at least these two highs here are relative equal highs, and there's a little gap here that's been left behind. So if pound USD actually does shoot for a long, we have at least another 1,000 pips to go. And at that point, if it's going to come for these equal highs too, then we have a little bit more before a sell. All right, so pretty interesting stuff when it comes to pound USD. And that's really kind of like my setup for the week. With the rest of the pairs, I mean, USD CHF, of course, is recovering. No surprise there that it's pushing back for a long. Okay. USD CAD, another one that's pushing pretty nicely long too. But I feel like for me, pound USD is going to be my focus, and ADUSD. I'm primarily picking those based on the news that we have this week, because the more volatility we've got going on, the more opportunity there is for some major moves, as long as you're on the right side and you're risk managing. Okay, so that's kind of my view. All right, now I'll throw in this because I know a lot is becoming a lot more popular, and I know that a lot of people trade this. So I am going to look at the US 30 for a few minutes here, just to give a little bit of a view of my own. So final thing here with the US 30. Now I have looked at it in a few details before. And to me, the US 30, this movement here, this induction here, and just looking at the overall price action. Now I know that the US 30 is an obvious bullish trend. If I take the range from COVID's low all the way up to here, for us to look at the range we're operating in right now, and the price is really extremely in premium pricing. So it's conducive, it's very unconducive for buying, but in terms of selling, it's actually good prices to sell from. Okay. Now, I've always looked at the US 30 and thought that there should be a short coming in soon. When I look at this demand order block that's been formed, and I've looked at this on different brokers, this low right here doesn't sit right with me, that it hasn't returned into demand before taking off for a long. And if you notice where the demand zone is exactly at the equilibrium point. So right now, we're above fair market value by quite a bit. And because we have this move, and I'll just kind of move this a little bit higher, because we have this move up here, to me, the US 30 is actually primed for a sell. We're inside of this area of supply. We've broken structure here. We have a market structure break from this swing low over here that the price has done. And we've kind of returned to the origin here. So if I was to switch the Fibonacci direction to the other way and actually pull this up right here. All right, right now we're just below the 86 level. So really deep discount price range right here. Now over on the weekly, the only unfortunate thing that we don't have yet is that we don't have a weekly trigger, which I would have liked to see with this high being taken. But we're not too far away from the high. So if we do have something like this week, on the H4, the price takes this weekly high, I'll be very much so looking to sell the US 30 and swing this at least from this 35 number down to the 27. And I'm sure that will produce a lot of pips. Now I'm just going to use the risk management tool so we can see what that would look like. And if I put an entry here, of course, I'm not going to put a stop loss of this amount, but putting that there is about 6K down with 0.01. So you can only imagine if you have 0.10, that would be 60K. If you put one lot, that's 600K, and obviously that would be a great trade and a great entry to get into. But I'm waiting for the weekly high to be taken, but we are in good areas of price action. If you see over here, we have a demand zone that price has wicked into a few times, and it has basically become a flip zone that the price has come back to, along with this validation point right here. So I'm actually really intrigued to see what the US 30 does. I mean, more information I can shed light on here is that, look, we have a liquidity gap over here, and not too far away, we have equal lows. So there's a very ferocious short coming in very soon on the US 30. And I'm actually here for it. I want to see what actually happens when we get here. Now, me doing this analysis, I don't look at it often, but now I'm starting to get ideas that I think I'm actually going to jump on the US 30 short. Okay, but it's not ready yet. So let's wait and see. What I'm going to do is that I'm going to leave an alarm above this high and wait for the price to actually take this high. Now I want to make it a different sound because all my alarms sound the same. I'm just going to get a random sound. I'll use alert 2. Yep, I'll use that alarm. If I hear that, it means the US 30 is taking a weekly high. And let's just see how the week closes. Probably we won't get the major move this week. It has to be probably next week, but let's see. All right, guys. So this is it for me. All right. I think there's some good opportunities flying around and it'll be great to see what we get out of it. So I'll catch you guys on the next one. And everybody take care and have a great day.